All right, welcome to TheoTrade. This is Don Kaufman. You're watching the evening video for January 20th, 2016. I mean, what do you say about trade today? Really in some recent memory, and so I've been trading since 1998, but in recent memory, I haven't seen as much volatility and chaos. I mean, today, it's right up there with the best of them. So if you were sitting in front of your screen all day, you probably feel pretty exhausted by this point, and you know exactly what I'm talking about. But, you know, middle of the morning over here, it really looked like, hey, there's a probability it's all over. And pretty much at that point, that is when traders were throwing in the towel, and we just took off to the upside. But let's just throw into perspective here what we've actually seen today in terms of a range. So we started the cash markets, okay, right at 1850 this morning. We came all the way down into, again, averted disaster at 1804, exploded back to 1870. And you guys know I've been talking about the 1871 level as being big time support, then it's becoming big time resistance over here. So if you're not necessarily in the levels, get into them. All right. So we come back up into this 1871 level, fail off of it, come back to 1850. And I'm telling you what, there's still, you know, a few minutes left in the trading day. And I always like to do these videos, and there's still a few minutes left in the trading day over here. And once again, we're trying to gain a little bit of footing, but just to put into perspective, we're still down about 1% on the S&P. But let's not just point out the obvious in here, okay? Because, well, in all reality, that is the obvious, what I just pointed out. Again, a couple of levels that I drew yesterday, displaying where a lot of the trade had occurred. Obviously, to the upside over here, we saw lots of trade at 1911, but then I also put this this trend line in here again, right at that 1871 level, and we literally went up today, touched it, and failed off of it. But again, you can see what felt like maybe some short-term capitulation. Again, it really kind of felt like on some intraday trade. Now I'm going to go to a 1 minute and kind of look at a clean chart. It felt like some traders were throwing in the towel, and maybe some short-term capitulation in here. However, time out. Let's not state the obvious. Let's look a little bit, you know, underneath the marketplace. One of the things I love to point out is doesn't matter what earnings says. I mean, if you look at Netflix, look no further. Stellar earnings. Stock opens, okay, about $1.50, $2 higher. The cash market falls to 97, only to rebound, and it's going to end the day pretty much massively unchanged. But the range on the trading day is nothing less than staggering out there in the types of moves that we've seen today. Google, Amazon, early in the session today are just getting clobbered. I mean, this is like a 25-point rebound from where we were in earlier trade. Again, I'm talking about the obvious. So what we're seeing is strength in technology. And again, you can see the NASDAQ, okay, and of course the Russell let us out of like the doldrums of earlier in the day. And the Russell, talk about oversold here, is now up almost a full percent. So where are we looking, and where am I specifically looking that maybe other traders aren't? There's one big issue that stands out to me, okay? It's financials. So financials, they can't get out of their own way. The S&Ps would have been absolutely on fire, would have been higher, substantially higher in today's trade if it weren't for financials, okay? Which brings me to the fact that bonds now have crested over the 160 level. Now they hit the 161 level in overnight trade over here, but they've just vaulted to, again, just kind of staggering levels at 160. So the bonds rallying takes interest rates down. Interest rates down is hurting the financials. The financials are still going to close the day here down 2%. Okay, so you can see I'm trying to close some positions inside of the XLF over here. I have still maintained quite a substantial short position in the XLF, and I'm still in, and again, if you're ever curious about positions that I am in, I'm still in quite a substantial position. I'm short just over 5,000 shares right now of the XLF position I've sustained for quite an amount of time over here. So when you're looking at the next few days of trade, all right, we have to look very carefully, not only at what financials are doing, but we did see what, again, it almost felt like a capitulation today, right? The VIX spiked all the way up to 32, kind of felt like your hair was on fire, midday. The only issue is we're still down 21 towards today's close. With 3-4 minutes to trade, we're still down 21. This is still a down day. I'm not sure that we've actually seen that kind of capitulation that you need to see in a marketplace that doesn't seem to be able to put, a good day together. And there happens to be this just consistent failure. Now, again, tomorrow's another day. Tomorrow, you could see markets on fire over here. However, even though I kind of think that we've seen some short-term capitulation, I don't think we're out of this yet. Not by a long shot. And again, not only is it financials, and financials are not really what kicked off some of this sell-side activity. I mean, really, if you want to blame on where the fire started, look no further than something like, energy. I like to look, instead of oil, look at the XLE. It's just easier to ascertain this. And you look at something like the energy sector today, it's still down 2.5%. It's the worst performing sector. It's the financials, though, that start to worry me, because even though the fire starts in energy, it typically ends up on the financials, because that train is never late. So we're going to be watching the financials very, very carefully. And again, so why my eye on the financials? Well, XLE and energy, so let's not confuse XLE and XLF, but energy, it's actually the implied volatility percentile spiked to 83rd percentile, which is, it's getting up there. Earlier today, this was all the way in the 91st percentile, meaning it's some of the highest implied volatility that we've seen any time in the last 52 weeks. That includes the August 24th of last year over there. Then when you look at the XLF, though, the XLF, it's only at the 75th percentile. What does that mean? It means there could be a lot more damage to come. Again, markets, they got a little scared today. Maybe you looked when the S&Ps were 50 points lower than they currently were. We were literally 50 points lower, and we were at 1804. Maybe you looked the market straight in the eyes and, you felt the fear. I don't think enough traders have, though, at this point. We didn't feel that good capitulation. We didn't feel that sell-side activity that becomes so intense, that it feels like the entire market starts to slow down. Yeah, well, it wasn't there. Last but not least, let's take a look at the volatility futures. The volatility futures are still screaming to us that we are, in the midst of, again, some more severe volatility. And again, what we're going to do to look at the volatility futures, we're going to look at the 28-day volatility futures, versus the duration. So we're going to look again, and you'll scroll back up over here. Here's the 28-day volatility futures. They're trading at 25, so risk is set at 25. That may mean nothing to you. But when you look further out in time, and you're like, okay, so risk is at 25, cool. When you look at further out in time, 56 days out, they're trading at 24.15, so we still have almost a full point differential. That means short-term risk is actually exceeding longer duration risk. All right, still means we're in the throes of volatility. And again, we may have rallied back and, stared, certain death in the face today, but you better still realize that we're down 20. There's the bell on the day. We're still down over 1%, though, on the S&Ps. And the further you go out in time, you're still going to see volatility futures are substantially higher in the short duration than they are in the long duration. Want to make sure, before we start calling any market bottoms here, that the volatility futures drop out of that inverted state. And they're not even close to doing that. So until then, again, we see a lot more volatility. Last, but definitely not least, let's just take a quick glance over at the SPX. Again, we're not getting too in tune right now with what levels we've seen. Bottom line is, I think short term, that 1804 may be in place. Maybe we even rally up a little bit, come right back into, again, that 1871 handle over there. However, in a little longer stance here in the next couple of weeks, I think we're still in for some turmoil in the markets. As I was saying, that last look at the SPX with 2 days remaining, volatility is up to 35%. We are looking at a $44 expected move. That, ladies and gentlemen, is quite substantial. Again, only seen that a handful of times inside of the last year of trade. Again, a $44 expected move with nothing more than Thursday and Friday to go in this week. With that, again, keep in perspective here, yeah, we rallied back up today, but then you realize, yeah, we're still down 20, okay? Though the Russell finished up, we actually finished on a little bit of a weaker note over here, and again, those financials can't get out of their own way, down about 2% on the day. Tonight, and in the archives, you will also find this, but tonight, Wednesday, January 20th, I'm going to be doing the evening session tonight. So we're going to be kicking off our evening coaching sessions. That's going to be probabilities and trading. So again, join us 8 p.m. Eastern Standard Time right here. Okay, when I say right here in the Theo chat room, that literally means right here in the Theo chat room. So log on to TheoTrade. Come right in here under member chat room. It'll be live right there at, again, 8 p.m. Eastern Standard Time. Enjoy it. If you can't catch us tonight, catch us in the archive over there. The archives are listed right next to that. Thanks a lot, everybody, for joining me, Don Kaufman, here at TheoTrade. See everybody this evening. Bye-bye.